Stocks closed sharply lower today, although they did finish off their lows. The Dow sunk 163 points or 1.3%. That's after the index surged 187 points on Friday. Today, the Dow was falling more than 240 points at its session lows. The S&P 500 was down 19 points or 1.5%, and the Nasdaq lost 35 points or 1.3%. Stocks plunged at the open. They then deepened their losses after Fitch Ratings said the European Union summit from last week did little to ease the pressure on the region's debt crisis. It said the crisis will persist beyond 2012, and it predicted a significant economic downturn in Europe for the short term. The Fitch critique now follows similar warnings by Moody's and Standard & Poor's. Moody's said the summit failed to deliver decisive policy measures. S&P put a negative credit watch on the region last week and said it would conclude its own review sometime after the summit. In short, the general perception is that Europe has taken some steps in the right direction, but that they are not enough. In terms of immediate relief, most of the EU countries agreed last Friday to provide the IMF with up to 200 billion euros in bilateral loans. However, the funding that Europe has so far isn't nearly enough of a safety net in case the situation in core nations gets worse. The two biggest losers on the Dow today were Bank of America and Intel. Intel dropped 4% after the company said its fourth quarter revenue would fall about $1 billion short of its previous guidance. Intel warned that it expects a shortage of hard drives because of severe flooding in Thailand. The shortage is expected to hurt its core PC market.